Hello and welcome to Markets View at Deven Choksey, the daily market podcast where we decode the Indian financial markets. The GIFT Nifty is trading higher this morning, which is indicating a gap-up start for the Indian market. The Asian markets are open largely on a higher note, the Nikkei is up more than 1%. US futures trade lower after cash market ended higher on Monday. The US market ended higher led by tech rally, where Nasdaq is up around 2.2% and Dow is off lows. Apple climbs 2.4%. Vision Pro device will be available for sale from the 2nd of Feb. The Boeing falls around 8% on temporary grounding of aircraft inspection of jets. Nvidia hits an all-time high, up 6.4% on CES announcements. The US 10-year yields is steady at 4% ahead of key economic data due this week. And Brent is trading at around $76 per barrel. On demand worries as Saudi makes sharp price cuts. Gold prices again are falling, where treasury yield and dollar index are steady. So this is how the global setup for the trading session today looks like. So let us now take a look at the trade setup for the domestic markets today. The market did fall nearly 1% and again reached the crucial support of 21,500 mark while breaking the 10-day EMA within a week. Overall, it still seems to be in the range of 21,500 to 21,850 levels. But in case of breaking the set support, the 21,350 to 21,300 zone will be key to watch out for on the downside, while on the higher side 21,800 to 21,850 zone will remain a hurdle. In the yesterday's session, Sensex did plunge around 670 points to close at 71,355, while Nifty dropped around 198 points to close at 21,513 and formed a long bearish candlestick pattern, which resembles a bearish engulfing kind of candlestick pattern on the daily charts, indicating the possibility of the trend reversal. The market reacting down sharply after a small rise is signaling a presence of strong overhead resistance around 21,750 to 21,800 level. The positive chart pattern, like higher tops and bottom, is intact, but as we see, the formation of the new lower top at 21,763 could be an alarming signal for bulls at the higher level. The next lower support to be watched at 21,350. Immediate resistance is placed at 21,650 level. Volatility also increased sharply, making the bulls uncomfortable at Dalal Street. The India VIX jumped around 7% to 13.46 from 12.63 level. The broader markets were also under pressure, with the Nifty mid-cap and small-cap indices falling around 1% and 0.6% respectively. Let's take a look at the key support and resistance levels for both Nifty and Bank Nifty. Nifty is likely to see immediate resistance at 21,538 followed by 21,758 and 21,861 level, while on the lower side it can take support at 21,486 followed by 21,422 and 21,319 levels. Talking about Bank Nifty, yesterday Bank Nifty bears staged a strong comeback as the index has decisively broken the 48,000 mark and closed 700 points or 1.5% lower at 47,450. The banking index has formed a long bearish candlestick pattern on the daily chart, and as we clearly see, there was a lot of volatility also seen. Selling pressure was evident across the banking sector. Sustained move below 47,700 may result in further declines towards the 47,000 level. To resume the uptrend, the index must surpass the key resistance at 48,300. The Bank Nifty is expected to see resistance at 47,521 level, followed by 48,138 and 48,431. While on the lower side, it may take support at 47,371 followed by 47,190 and 46,897. So these are all the important support and resistance levels. Let us now take a look at the stocks and news. Lemon Tree Hotels will be in news as the hotel chain signed a new hotel in Meerut, Uttar Pradesh. The hotel will be open from FY25 and will be franchised by the company. The hotel will have 75 rooms. The next stock in news is Oil India, as the state-owned oil and gas exploration company signed a joint venture agreement with Assam Power Generation Corporation to work together in renewable green energy business. The company will join hands with the public sector company to achieve maximum renewable power generation in the state. Keep an eye on BEML as the company has bagged a 3 30 crore worth of order from the Ministry of Defence to supply a mechanical minefield marking equipment Mark II. Brigade Enterprises will be in focus as the Bangalore-based real estate developer signed MOUs worth Rs 3,400 crore with the Tamil Nadu government to develop projects in the next 3 to 4 years as a part of the Tamil Nadu Global Investor Meet 2024 Chennai. Keep an eye on Eicher Motors as Royal Enfield signed a non-binding MOU with the Tamil Nadu government to invest 3,000 crore over 8 years to build greenfield and brownfield projects in the state as part of the Tamil Nadu Global Investors Meet 2024 Chennai. Cipla will be in focus as the pharma company has announced a joint venture in the US with Kimwell Biopharma and Manipal Education and Medical Group to develop and commercialize novel cell therapy products for unmet medical needs in the US, Japan and the EU. And last but not the least, Bajaj Auto will be in focus as the 2 and 3 wheeler maker said the board of directors approved the proposal to buy back shares worth Rs 4,000 crore. The company will buy back 40 lakh shares at an average price of Rs 10,000 per share. So these are all the stocks in news where clearly as we see automobile, 2 and 3 wheeler companies like Bajaj Auto, pharma healthcare diagnostic companies like Cipla, oil and gas exploration company like Oil India, of course real estate developer like Brigade Enterprises will be in focus. Let us now take a look at the FIs and DIs data. The foreign institutional investors bought shares worth Rs 16 crore, while the domestic institutional investors purchased shares worth Rs 156 crore on the 8th of January. And with this, we come to the wrap of our podcast session for today. As we clearly see that the market conditions are quite volatile, and in this volatility, research is the backbone of successful portfolio creation. Wealth creation is an art that we understand. We at Deven Choksey have our exclusive research services which are powerful and successful. To avail our exclusive research services, we invite you to join us. Just click on the link below and you're done. Fill in your basic details and our team will reach out to you. So don't wait any further and embark on a wealth building adventure together. Thank you and have a nice day.